Welcome to the Deep Dive. If you're tuning in today, you're likely looking to get past the headlines and really understand one of the biggest crypto stories recently, the final wrap-up of that huge legal fight between the SEC and Ripple Labs over XRP.
It really has been a long time coming, hasn't it? Years. And the way it ended, well, it sent some serious waves through the market almost instantly, affecting pretty much everything.
Absolutely. And that's what we're here for today, to give you the essential takeaways from the sources we've gathered. We're looking at some detailed market analysis, mainly from CoinDesk, and also digging into the whole XRP ETF situation using insights from the block. The idea is, by the end of this, you'll have a much clearer picture of what's actually going on with XRP after the settlement.
Yeah, we're going to focus on two main things. First, that immediate market roller coaster XRP went on as soon as the settlement news dropped, the volatility.
Right.
And second, we'll get into all the buzz, the speculation, and maybe some of the realities around XRP ETFs, because that conversation definitely heated up.
So why should you care about all this? Well, look, it's bigger than just XRP. This whole situation, especially the regulatory clarity aspect, it kind of sets a tone for the broader crypto market. And it also tells us a lot about how big money, institutional interest, is playing a bigger role. So understanding this stuff is pretty crucial if you're trying to make sense of the crypto world right now. Let's dive in.
Okay, so the starting point, the big catalyst, was the official end of that 5-year legal battle.
Yeah.
The one the SEC kicked off way back in late 2020. That lawsuit, it really hung over XRP for a long time.
Yeah, it did. And the ending wasn't quiet, was it? We saw this joint dismissal of appeals formally stamped by the Second Circuit Appeals Court. That's pretty final. Ripple's own chief legal officer, Stuart Alderete, he put it out there on X, said, following the commission's vote today, the SEC and Ripple formally filed directly with the Second Circuit to dismiss their appeals. Basically, both sides agreed to just stop fighting.
And it's worth remembering what the fight was even about. Back in December 2020, the SEC basically accused Ripple of selling XRP as an unregistered security, raising, $1.3 billion.
Yeah, a huge number.
Their whole argument was that XRP was essentially an investment contract, like a stock, and should be registered. That kicked off years of legal back and forth. The whole industry was watching that one.
But the really critical piece, the context for this final settlement, was Judge Torres's ruling from July 2023. Because that wasn't a simple win or lose, was it?
Not at all. It was famously nuanced. She said that programmatic sales, like when XRP was sold on exchanges to everyday buyers who didn't know who was selling those, didn't violate securities laws. That was massive for Ripple.
Right, kind of implying the token itself wasn't automatically a security when traded like that.
Exactly. But, and this is the key part, she also ruled that direct sales from Ripple to institutional investors, where there was a clear contract and expectation of profit from Ripple's work, those were security sales.
So a split decision, a security sometimes, but not always. That was the tricky part.
Absolutely groundbreaking. Really, it wasn't the clean sweep either side might have wanted, but it carved out this unique path. It challenged the SEC's kind of everything's a security approach, at least a bit.
And offered maybe a sliver of hope or a potential model for other digital assets facing similar questions. It definitely caused a stir, even with its complexity.
Definitely. And that complexity, that nuanced ruling, set the stage for how the market reacted when the final settlement came through, ending any chance of appeals.
Yeah, the reaction wasn't just quick, it was forceful and, well, pretty dramatic, as you'd expect.
Dramatic is a good word for it. CoinDesk's data showed XRP initially jumped more than 13% on that Friday when the news broke. You saw that instant relief, that burst of optimism.
Like everyone who'd been waiting just piled in.
Pretty much. But then, almost as fast, it did a U-turn. XRP saw a 5% drop in value before stabilizing. It was like the market took a quick breath, celebrated, and then immediately started taking profits.
Classic crypto volatility, maybe. Or maybe that sell the news thing playing out.
Could be a bit of both. The specific price moves really tell the story. CoinDesk pointed out that on August 8th and 9th, XRP went from $3.34 down to $3.20, pretty sharply between 2 and 3 p.m. UTC.
Okay, so a quick, steep drop.
Yeah, and on high volume, which is key, that signals real selling pressure. But then it bounced back, climbing to $3.30 by 7 p.m. UTC. So in just a few hours, you have the $1.17 swing, which works out to 5.24% volatility. That's a pretty wild ride.
And that immediate sell-off after good news, it really smells like profit-taking, doesn't it? Like some bigger players who bought lower down during all the lawsuit uncertainty just saw this as their perfect exit point.
It strongly suggests that, strategic players who had their orders ready to go, basically capping that initial rally. It felt less like panic selling and more like planned exits.
The volume numbers you mentioned are fascinating, too. That drop from $3.36 to $3.20 happened on, what was it, 209 million volume in 1 hour.
209.67 million, yeah. The largest single-hour print of the session. That's not noise. That's significant capital moving out, high conviction selling.
But then the buyers showed up. They defended the $3.20 zone. That's crucial. That defense pushed the price right back up towards $3.33.
Exactly. So that $3.20 level wasn't just a random number. It got confirmed as key support,
Right.
precisely because that massive sell volume was absorbed there. It tells you there was serious buying interest waiting at that price.
Suggests strong belief that $3.20 was maybe the floor for now.
It certainly established clear technical levels. You've got resistance now, pretty clearly defined, between $3.31 and $3.33, where sellers are stepping back in.
Right, maybe still some of that profit-taking pressure lingering.
Could be, and then you have that solid support locked in at $3.20. Those are the lines in the sand for traders in the short term.
And technically there was more going on too, right? Something about a bull flag?
Yeah, that's interesting. CoinDesk noted a bull flag structure forming above $3.28. Now, after all that volatility, seeing a classic bullish pattern like that emerge suggests the underlying positive sentiment might still be there, despite the sell-off.
So it hints that if XRP can break past that $3.33 resistance, it might actually continue higher.
That's what the pattern suggests, yes. And adding to that, there was also a volume spike to 1.86 million at 0.152, which looks like targeted accumulation attempts.
Yeah.
Someone was deliberately buying the dip, it seems.
Okay, so putting it all together, what are the smart traders watching right now?
Well, first, will that $3.20 support hold if tested again? Especially with institutions likely still figuring out their positions.
Makes sense.
Second, can it break cleanly above $3.33? That would be the signal that this consolidation, this profit-taking phase, might be over.
And then I guess just watching for consistent buying pressure that seems linked to this new regulatory clarity. Like, is new money actually coming in because the lawsuit's over?
Precisely. But as you said earlier, it's not just about the immediate chart watching. This clarity has really kicked off a whole different conversation, much bigger picture, focused on institutional products.
Right, the ETF discussion.
Yeah.
Especially with what's happening internationally, like with SBI in Japan, and how that might influence the U.S.
Exactly. That takes us right into our next big topic, the XRP ETF race. The hopes, the hurdles, and all the different opinions flying around.
Because that regulatory clarity we talked about, it's not just about ending the lawsuit. It's like flipping a switch for potential financial products, right?
Absolutely. For big institutions, regulatory certainty is everything. It lowers the risk perception dramatically, makes things like XRP seem less like the Wild West and more like something they can actually package and sell to their clients through familiar structures like ETFs. It's the bridge.
And we're already seeing movement outside the U.S. You mentioned SBI Holdings in Japan, a big financial player, longtime Ripple partner. They've filed for a Bitcoin-XRP ETF. That's pretty significant.
It really is. Japan's a major regulated market. Seeing a firm like SBI make that move sends a signal. It suggests that, at least in some places, regulators and institutions are comfortable combining Bitcoin and XRP in one product. That could definitely influence thinking elsewhere.
Sets a precedent, maybe.
Potentially, yeah. But then you look at the U.S., and it's more complicated. The SEC is apparently weighing several proposals to launch XRP ETFs. That's positive.
But they're also looking at tons of others, right? SOL, DOGE. It's a crowded field.
It is. Dozens of crypto funds are apparently under review. It shows a broader interest, perhaps spurred by the Bitcoin ETF success and maybe this Ripple clarity. But the SEC is still taking its time.
And then there's that political angle mentioned in the sources, the idea of a potentially friendlier stance toward digital assets under the Trump administration. Now, we don't pick sides here, obviously, but a shift in the White House could theoretically change the SEC's approach, couldn't it?
It could. A different administration might appoint commissioners with different views, potentially leading to faster approvals or a generally more open attitude toward crypto innovation. It's definitely something the market watches, regardless of politics, just the overall regulatory mood music.
Okay, but in the ETF world, especially in the U.S., one name looms larger than any other: BlackRock.
Oh, absolutely. As the world's largest asset manager, what they do or don't do sends massive signals. They're already big players in Bitcoin ETFs, involved with Ethereum ETFs, so everyone wants to know, what about XRP?
And their official word, for now at least, is pretty clear-cut, isn't it?
It is. They stated quite directly. At this time, BlackRock does not have any plans to file an XRP or SL ETF. End of story for now. That definitely cooled some of the hype.
Yeah, it raises the question, why not? If the regulatory path is clearer, why are they holding back?
And that sparked a lot of debate. You've got different camps forming.
On the optimistic side, you have people like Nate Gerasi, president at Novatius Wealth. He suggested on X that maybe, just maybe, BlackRock was waiting for the lawsuit to end before moving on an iShares XRP ETF.
Right. His argument is basically that it makes zero sense for a giant like BlackRock to just stop at Bitcoin and Ethereum. He said, kind of bluntly, that ignoring other major cryptos would be like saying only DPC and ETH will ever have value. Bold.
So he sees it as inevitable, just a matter of timing.
That seems to be his view. He also mentioned on his podcast that BlackRock might be playing a strategic game. Let competitors launch and see how demand shapes up first.
The fast follower approach. Let others test the waters.
Exactly. Let the smaller players deal with the initial hurdles, prove the market exists, and then BlackRock comes in with its huge scale and distribution power. It's a common tactic for market leaders.
Makes sense strategically, but there are definitely counter-arguments. James Seffert, the Bloomberg ETF analyst, he sounded more skeptical.
He did. He basically said, look, it's not impossible, but if BlackRock really wanted an XRP or SOL ETF in the first wave, they've had plenty of time to do it.
Yeah.
The lawsuit didn't just end yesterday. They could have signaled intent much earlier if it was a top priority.
Implying it just wasn't a top priority for them, right?
That's the implication. And Alexander Bloom, CEO of Two Prime Digital Assets, he was even more direct, called it wishful thinking. Yeah, his take was the lawsuit didn't stand in the way for BlackRock. He thinks they're focused on making their existing Bitcoin and Ethereum ETFs successful right now. Launching XRP might just complicate things.
Dilute the focus, maybe.
Possibly. And he also brought up the market cap difference. XRP is less than half of ETH's market cap. For a giant like BlackRock, maybe XRP just isn't big enough yet to justify the effort compared to promoting their existing blockbusters.
And we also heard from Vivian Fang, the finance professor. She had a slightly different angle, didn't she? Comparing XRP to Solana.
Yeah, she suggested it's actually more likely that we will see ETFs filed for public blockchain-based altcoins like Solana, SOL, before we see one dedicated to Ripple, XRP.
Why? What's the thinking there?
Her perspective seems to be about the underlying blockchain structure. The idea is that more decentralized public blockchains like Solana might be seen as less risky by regulators and institutions compared to a token like XRP, which has closer ties to a specific company, Ripple.
Ah, the decentralization argument. That could play a role in which alts get ETFs first. Interesting.
Definitely adds another layer to the debate. But even with BlackRock on the sidelines for now, it's not like nobody else is interested.
No, definitely not. The sources mentioned several other firms have already filed forms for a potential XRP ETF. Names like ProShares.
Yep, ProShares, 21 Shares, Canary, Bitwise. These are serious players in the crypto ETP space. It shows there's still broad belief in the potential for an XRP ETF, even without the biggest fish just yet.
And wasn't there that really bullish call from Bloomberg analysts back in June? Something about 90% odds?
There was. They raised their year-end odds of spot XRP, Dogecoin, and Cardano ETF approvals to 90%. Now, odds are just odds, but it shows the optimism among some key watchers that these things are getting closer, fueled by the evolving regulatory picture.
So a very active space, even if BlackRock's playing coy. It really feels like we're moving beyond just Bitcoin and Ethereum in the ETF conversation.
We absolutely are, and that brings us to the wider implications, doesn't it?
Yeah.
This isn't just about XRP's price or whether it gets an ETF tomorrow. The Ripple settlement has much broader significance.
For the whole crypto industry, yeah. How does this clarity, this specific ruling, set a precedent? Does it make the SEC think twice before labeling other tokens as securities? Especially if they're sold on exchanges like XRP was.
That's the multi-billion-dollar question, isn't it? It might encourage other projects to look closely at Judge Torres's reasoning, maybe adjust how they distribute tokens to fit the programmatic sales model that was deemed okay. It could potentially reduce the legal risk for a whole swath of altcoins.
Which could, in turn, attract more investment and maybe spur more innovation now that one major legal cloud has partly lifted.
That's the hope. Less fear of sudden SEC action could definitely make investors more comfortable and allow projects to focus more on building rather than just legal defense. It subtly recalibrates risk across the board.
And this all feeds into that bigger trend we keep talking about, the institutionalization of crypto. We saw that huge trading volume around the settlement news. That wasn't just retail traders.
No, That significant trading volume highlighting institutional activity is clear evidence. Big players are active, they're making strategic moves, they're treating crypto as a serious asset class now. They're building the infrastructure, dedicating real capital.
And the ETFs are the most visible sign of that, right? Taking this digital asset class and plugging it directly into the traditional finance plumbing.
Exactly. ETFs are how mainstream finance works, bringing Bitcoin, Ethereum, and potentially XRP, SOL, others into that wrapper. It's a massive convergence. It connects the crypto world to trillions of dollars managed by traditional firms and advisors. It's a huge step towards maturity.
It really signals that crypto is moving out of the fringes and into the mainstream portfolio conversation.
And just to put that interest in perspective, it's worth remembering why institutions are looking at crypto. The long-term performance data is pretty compelling, even if 2025 hasn't been Bitcoin's best year compared to gold so far.
Right. The sources mentioned Bitcoin was up about 25.2% in 2025, while gold was up 29%.
Correct. Gold had the edge recently. But you zoom out. Since 2011, Bitcoin's returns have just been astronomical compared to everything else.
Like, mind-bogglingly different. The source said it outperformed gold by 308,000 times since 2011.
Something like that, yeah. And vastly outperformed stocks, real estate.
Yeah.
Its long-term annualized gains have been in a different league. Now, past performance isn't future guarantee, obviously, but that kind of track record is exactly why institutions can't ignore it anymore.
And why they want easier ways to get exposure, hence the demand for ETFs for assets like XRP, despite the volatility. It offers diversification and that potential for high growth, wrapped in a structure they understand.
Precisely. It's moving from a niche curiosity to a potential portfolio component.
So this evolution of crypto products, with all these ETFs launching or being proposed, it's fundamentally changing access.
It is. It makes it way easier for the average investor through their normal brokerage account to get involved. Lowers the barrier to entry massively. That could bring huge inflows of capital.
But it also creates challenges, right? It ties crypto more closely to traditional market movements, brings in more regulation, raises questions about who holds the underlying assets, market influence.
Definitely. It's not all upside. More institutional involvement means crypto might become more correlated with stocks, more sensitive to interest rates, and you have debates about custody and whether these large ETF issuers might end up concentrating too much power or influence. It's a trade-off, like you said, a double-edged sword. But it undeniably signals integration.
Okay, well, that feels like a pretty comprehensive journey through the post-settlement world of XRP.
I think we've covered the key points. We hit the initial market volatility, the huge significance of the regulatory clarity from the settlement, and then dove deep into that whole ETF race, the arguments for, the arguments against, especially around BlackRock.
Yeah, hopefully this deep dive has given you, our listener, a much clearer understanding of all the moving parts here. It's complex, it's evolving fast, but hopefully you feel better equipped to follow the story now.
That's the goal, giving you the context and the different perspectives so you can form your own informed view.
And hey, just a quick reminder before we wrap up, if you found this useful, if you got value out of this deep dive, please do think about subscribing to the channel, maybe leave a comment, give the video a like, all that engagement. It really does help us out. It helps other people find the content, and frankly, it allows us to keep making these deep dives for you.
Your support genuinely makes a difference, so thank you for that. And as we look ahead, with the Ripple lawsuit finally over, the big question really hangs in the air. How will this change crypto regulation going forward?
And maybe the even more exciting question for market watchers, which altcoin is next? If institutional money is looking beyond Bitcoin and Ethereum for ETF candidates, who gets the nod? SOL, XRP, DOGE, Cardano.
The race is definitely on. Always something new happening in this space.
Absolutely. Well, that's all for this episode. Until next time on The Deep Dive.